Hello, everybody, and welcome back to the Mouthy Money podcast. I am joined as ever by my co-host Chris Tuite, who is head of consumer finance at financial communications consultancy MRM. Chris, hello, good morning, happy Monday to you.
Morning, Ed. Happy Monday to you too, mate.
I think we've got. I think this is our fun topic. Well, not fun topic. It's a topic we like to get our teeth sunk into a little bit. We are talking about what could be coming in the budget, which is coming up at the end of March. To do that, we are joined by Craig Rickman, who is personal finance editor at investment platform Interactive Investor. Craig, good morning. Welcome to the podcast.
Thank you very much, Ed. Good morning to you both.
So today we're going to be talking about the budget, or not a budget, I think, as Rachel Reeves might be terming it at the moment. Schrodinger's budget. It's taking
Is it there? Is it not? I don't know.
Is it there? Is it? Yeah, exactly. Craig, just before we do that, do you want to just tell us a bit about yourself and your kind of background? Tell us a bit about Interactive Investor. Give us the bullet on that.
Sure, yeah. So I've been at Interactive Investor since July 2023, doing the role that I'm doing now. So it's personal finance editor. So writing about personal finance topics, also do some videos involved in our sort of house podcast as well. Yeah, so we're an investment platform, which is, so for those who are not familiar with investment platforms, it's just kind of an online hub where you can go and buy investments, sell investments and hold investments. And we've got quite a big anniversary this year. I think it's our, it's 30 years, I think. It might be 25. It's one of the two.
We'll be sure to nail that information down, put it in the show notes, I'm sure. So today we are talking the budget, not a budget. So what does that mean? So obviously we get an autumn budget now every year. I know Labour and Rachel Reeves, who's the Chancellor, was at pains to say, no, we're only having one budget a year. In the spring is what's called the spring statement, which is more of like a fiscal update on how things are getting on, right? But there's a chance that things are not going to be quite as easy. Is that fair to say, Craig, do you think?
I think so, yeah. So it was, I mean, when it was sort of originally, when it was originally communicated, it seemed like it was going to be a kind of non-event. Like you say, one major fiscal event a year to be held in the autumn, with the event in the spring, probably known as a spring statement, was going to be what we kind of assumed would be Rachel Reeves sharing the Office for Budget Responsibilities, Fiscal and Economic Outlook. But yeah, the mood has shifted in the past couple of months, and I guess the question is now is will it turn into a fiscal event of sorts? We're in this sort of unknown place, and with 2 and a bit weeks to go, inevitably a lot's going to continue to change in between now and then.
I remember this happening before with the Tories back during the Brexit years, when it was Philip Hammond who was Chancellor, wasn't it? He tried to do this thing of one budget a year, but actually it turns out the world is a crazy place. I think you have to make decisions more regularly. Chris, do you remember those heady times?
I do, yeah. It's interesting with Rachel Reeves, because she was pretty adamant that, and pretty ballsy and confident, I think, when she delivered the statement in the autumn. And now we are in the spring, and like you say, everything has changed to the point where there's a lot of concerns about whether or not she's the kind of own fiscal rules that she set herself today still even apply. So I understand you don't want chopping and changing, right? We talk about this with investing and other stuff just on a personal level, but on a macro sort of economic level, you want these things to kind of play out. You don't want to be tweaking them out of existence, if you like, every few months, or changing them slightly so impacts are minimized. But I'm not entirely surprised. It does feel like the entire economic world order is currently being redrawn, and so now we're going to have a think about what we do and how you kind of respond to that. It does kind of make me a little bit uncomfortable as somebody who prefers slow and steady, set and forget, stick to my guns, stick to my principles. I think the idea that there might be some more changes coming down the line that we need to navigate might be more of a negative indication than a positive. But maybe it's just because it's Monday, Ed. Am I talking nonsense? What do you think?
No, I think I don't know. There's too much going on in the world, isn't there? And there's only so much you can do to stem the flow of world events. And unfortunately, and we've talked about this before, these things do affect us, unfortunately, because it leads to things like inflation and higher interest rates and blah, blah, and that feeds into people's mortgages and savings, etc. In terms of, thinking a little bit now, we're going to kind of divide this up into kind of two parts. First part, we're going to look at what we've got an indication that is coming up and what might come up. And there's a couple of things I think which we have a bit more of a potential idea of what's coming. And then I think we'll probably, just for the fun and the banter, we're going to have some things you'd like to see at the end. That's always my favourite part, because I like to come up with my controversial ideas at that point. But the first one, and Craig, this is, I mean, one of the key ones which we want to get your kind of view on is, and this is probably the most concrete thing we've had a discussion about in the media or wherever, is about potentially cutting the cash ISA allowance. Do you want to just to walk us through what the implications of that would be and kind of what it means?
Yeah, well, it's an interesting development, that's for sure. I mean, there's been quite a lot of talk for a while about the need to simplify the ISA landscape. It's become, in some respects, a bit of a mess over the years, and that can make it pretty tough for those, particularly novice savers and investors, to choose the right one. So there have been some rumours that there are going to be some changes to the ISA allowance coming, but not necessarily simplified, and that would be to reduce the cash ISA allowance down. It's currently 20,000. You get 20,000 across sort of most ISA types. The lifetime ISA allowance is a bit smaller, as is the junior one, but for the rest of it, for adults, you can put £20,000 into ISAs every year. But there's talk that the cash ISA allowance might be reduced, which wouldn't be a new concept. In fact, when ISAs were launched in 1999 up until the sort of middle of the previous decade, the cash ISA allowance was smaller. So it's a sort of a new concept, but it would be more sort of going back to an old one. But and when that happened, well, when the cash ISA allowance was sort of brought in line with the stocks and shares one, the idea behind it was to make things simpler, which is, you know, something that the current government want or seeking to take a bit further. But the whole idea behind this is to try and encourage people to invest more money rather than save it, and that's been seen as one way to do it. I know the Labour Party is looking at various things around this, including pensions, but there is some talk that that's why they may choose to reduce the cash ISA allowance. But what will happen with it, whether anything will happen as soon as the spring forecast remains to be seen.
I think my slightly more cynical take on it, and my kind of conflict here is I actually think that a lower ISA might be a good thing. Firstly, because average people who's filling their 20 grand ISA on a yearly basis, right? It's a big number to hit. You've got to be somebody who's probably got a bit more, in set aside already in order to max that out. So, and the thing I like about a product like the lifetime ISA is it's got quite a low annual limit. So actually it acts more like a target for people to aim for. And actually can be quite nice in kind of behavioral terms. My more cynical view of it would be they're cracking down as well a little bit because they've already done that tweak to inheritance of pensions and inheritance. So putting them inside the estate. And that means because advisors were telling people, your pension is your kind of inheritance get out clause. And now that's changed. And I think I've seen, Chris, tell me if I'm wrong, platforms are seeing the amount going into ISAs has spiked up, right? Craig, you probably have some numbers on this as well.
Yeah, I've certainly seen that reported in the media.
Yeah.
I think there's a few things there. If I jump in on that.
Yeah, go on.
There's a couple. I was listening to Moneybox over the weekend. They did a bit of a piece on it, and Rachel Reeves is wanting to encourage investment, and we understand that. I think they were saying that the average is 13,400 that goes into the average cash ISA, or is in the average cash ISA. And I think most people are saving far less than that, closer to the smaller limits that you were talking about, Ed. So there is an element of what's the reality of the situation we here. I kind of understand that. I do have sort of mixed feelings on it, though, because there was a conversation. There was somebody from the Building Societies Association who was saying that they did a survey and that 90% of their respondents said that they don't want to take any extra risk with their money. Now, I'm torn on that because we've talked about wealth generation, right? And we talked about the cumulative inflation rate since 2001 is at 22.4%. And we all have to get richer to try and meet that ever-raising bar, let's be honest. And keeping your money in cash isn't going to do that. But I do have to respect the kind of emotional journey that a lot of these savers are on, where they're saying, we don't want to take any more risk with it because things are so uncomfortably volatile out there or uncertain that we want to have some cash on hand in order to be able to respond to those things. And I'd like to keep it in cash. Thank you very much. So I think there's a bit of I understand that impulse. The other thing, we spoke to Money Farm about this the other week. I'd be interested to get your views on this, Craig, but they the idea that putting money into stocks and shares ISAs is suddenly going to materialize its way through into the UK economy and companies that are directly going to be impacted by that inflow. While it might be good for sort of indices like the FTSE, I'm not sure whether or not the pipe work exists to actually make that money flow into the areas we need directly, and that actually it might end up being lost out in other kind of different ways. So I sort of understand the impulse. I understand that we do need to get more people investing. We said as much, Ed, last week. We do. But, is cutting off people's choice the way to do it? I'm not sure.
Yeah. I mean, just further, I agree with that. I mean, there's just no guarantee, is there? You can reduce the cash out allowance, but it doesn't mean they're going to, it doesn't mean they're going to invest in a stocks and shares version. They might just use other cash accounts if they've got sort of extra money to invest. And the second bit, does that mean it's going to flow into the areas that the government wants or needs it to? The answer to that is we don't know. So, and it would just be a big decision, wouldn't it, to start, reducing ISA limits, because presumably that would mean as well that you could no longer transfer from a stocks and shares to a cash ISA, which is how it used to be. But then when the limits were equalised, you could. So I guess there's some concerns there that it might make the ISA landscape more complicated again with that part of it rather than simpler, which would perhaps go against what the government's overall aim is. So I think it's a big decisions to make around it if that's what they're looking to do.
I agree. I think if they went for it, it would be an enormous political sea change, because if you look at, and Craig, you gave us a bit of history there on the ISA. The ISA is probably, it's extremely successful because it's generally such a simple product. It has got more complicated over time, but generally speaking, the options available and the allowances, etc., which if you've got money in an ISA, it's tax-free forever kind of thing. That's pretty powerful when you think about how much tax takes from all of our wealth and income and all that kind of thing on an annual and over a lifetime basis. It would be a huge sea change, because it would be the first time that we've seen a government actually say, no, we're taking away some of your ISA rights now. This is it. We can't afford to give it to you anymore, kind of thing. I think that would be concerning in the sense that the first government that kind of breaks the seal on that is then opening it up to what happens with pensions, where stuff gets chopped and changed and tweaked so much. Do you think that's possible, that it could get even worse at that point?
Yeah, and it's something that we want to avoid. And I guess that's why I think there was little resistance when Rachel Reeves said we're going to have one major fiscal event a year. I mean, the rumour mill before the autumn budget was, there are always rumours before every major fiscal event, but it was extraordinary. And we certainly wanted to avoid a repeat of that so quickly as well. Whether that will happen again in the lead up to this year's autumn event, I guess, it will depend. Some of that will depend on what happens at the spring forecast. But it's just this constant chopping and changing of rules it just harms people's confidence in the system, their willingness to perhaps engage with it. So I think, the whole idea of this being a sort of non-event was to bring some stability and consistency. So, and I think that applies across the board to tax and savings allowances as well. But if they're going to reduce it, then you would think, well, what's going to happen next? So there are big risks to that, for sure.
I'm interested in this aversion to investing, Ed, actually, and I think that's a bigger issue that we need to solve. And I don't know what the answer is, but is there in any way? I suppose the idea is we're nudging people out of cash and into stock markets, but we're doing it unwittingly. It's not a nudge; it's a shove. It's like, go and put your money there. And actually, how can we collectively, government, this industry, everybody kind of make the argument better that you are better off investing your money over the long period of time. And that doesn't constitute financial advice and all the usual disclaimers, which you'll do in a minute, Ed, when I say something I shouldn't. But I do think, the numbers bear it out, And I say that as somebody who has saved religiously into a cash ISA and has, probably more than the 6-month emergency fund, because I'm a naturally cautious individual. But even I know that actually I'm making a kind of conscious decision there, and I probably need to start moving that money more into slightly riskier fields when it comes to my stocks and shares ISA, which I also have. So it's how do we make that argument? Because in America, they're more than happy to do it, right? And I don't know if that's the landscape, whether that's the products available, or whether they're just more willing to kind of put their money out there because that conversation is more well entrenched. But if we do want to turn the country into more savvy investors, I think making people feel more uncomfortable about it is probably not the right way to go about it. It needs to create some goodwill with it. And I always hark back to the sort of talk to Sid thing, and I wasn't around for that, but from what I could see, that kind of worked, didn't it? People kind of did invest in those kind of. So is there a campaign we need to do around that? Is it more winning the battle for hearts and minds rather than saying, like naughty school kids, you can't do that anymore. You can't put your money where you want to, and do what we tell you. I think that's part of the problem, really, is that kind of dynamic. We need to start treating people like adults a bit more. But anyway,
yeah, I think it may be a bit sort of wishful thinking to think that if someone is only investing in stocks and shares because they've run out of ISA allowance for the year, and they think, well, I still want to save tax, so I'm going to put it in a stocks and shares, the stocks and shares type, and invest it.
That kind of investor is always going to be overtly cautious as well, aren't they? Because they're going to be kind of like, well, I only wanted to be in cash, but here I am, so I'm going to get some vanilla government bond or something like that and just be very, very, play it very safe, which is probably not what they ultimately want. They want to improve outcomes, not just replicate them in a slightly different format kind of thing.
And it doesn't help that we're in this executive order mania and this Trump tariff thing and all that kind of good stuff where, you just, the markets seem to be reforming in front of people. I mean, if you had a look at how they performed recently, I mean, a very short term period, there's been quite violent swings up and down as everyone's trying to settle down into a new rhythm. So if you're trying to tell the UK population, don't worry, everything will be fine, it might not be the best time to do it. We might need to be, you need to have a longer term horizon, as we know. But, it might make people feel that little bit more nervous. So I'll be interested to see if they did do it, how they couch it. How do you position it? Because investing over the longer term will bring better outcomes. That is what all the data tells us and what we've seen. But actually, I can understand why people might be a bit reticent if they pick up a newspaper or look at what their stocks and shares ISA or their pensions doing at the moment. They might think, oh, I'm not too sure, particularly with rising cost of living and increasing pressures on day-to-day bills. It's a tough environment to kind of win that battle of hearts and minds.
Yeah, I mean, I think ultimately as well, and this is something I know we talked about this last week, and I bang on about it. It's reminding everybody that if you are in work, you are auto-enrolled, and if you are auto-enrolled, you are invested already. Like, it doesn't matter whether you're interested in taking out stocks, shares, ISA. What matters is that you need to engage with the fact that you are an investor if you work for a living and have a pension, even if it's with a massive trust, a master trust like Nest or someone like that. If you work for a small employer, it's very, very popular. Your money is put into investments, and, it's on you to take more agency over that. And I think people do need to take more agency over that and be more noisy about how, and I guess it's up to people like us to just bang on about it. I just remind everybody to go out and do it as much as possible. Just thinking, looking a bit beyond the ISA story, because I think that is a real point of focus because there's not been a huge amount else. I think the other really big thing, and this kind of, I guess, is related to the pensions thing, is in terms of what Rachel Reeves could be doing in a couple of weeks' time now. The big kind of story that seems to be emerging, and it looks like we might even have a bit of a Labour backbench rebellion brewing over, which could be politically quite interesting. I think I saw this morning something like 80 MPs have expressed a bit of unhappiness about it, is basically slashing the welfare bill. and now this is it's a funny one for us to come at, and I think it's difficult to talk about welfare, especially because there's so many different aspects to it. But the thing that I always, and I love to dig my teeth into, is when you look at the welfare bill and you think, okay, well, so someone's suggesting that we cut the welfare bill, fine. Where are the cuts going to come from? And you look at how much we spend on welfare every year, and you realise suddenly, oh, actually half the money is just half of it. The entire welfare bill, which is something like 250 something billion a year, half of it's going on the state pension. And then suddenly you realise, oh, okay, well, that's the root cause of all the problem then. It's the state pension. So, I mean, could we see changes to the state pension? I think the big thing would be triple lock. Would that be the biggest target, Craig?
Certainly be the biggest target. Pretty difficult for the government to do anything with it. I mean, they pledged to keep the triple lock for this Parliament. It's a very, very sensitive area to discuss and raise. So you'd think that that's off the table for at least the remainder of this Parliament. I mean, it's a government at some point is going to have to obviously have a look at it, and what the future will hold for that policy, we don't know. But you'd imagine that is off the table for this event anyway, and for the rest of this Parliament. Who knows? Yeah,
I mean, if they're really, making difficult choices, and if they think they could, because they've got a big majority, if they could ride out the rebels, didn't they already break the pledge on the winter fuel allowance? I mean, how radical do we need to be at this point, particularly in the face of, the geopolitical stuff that we've got coming down the pipeline, increasing defense spending to 3% of GDP and that kind of thing. They're going to have to, even before that, we're in a position now where her fiscal room is completely collapsed. What do you do? Chris, we've got, the Mouthy money view on it. Do you want to elucidate the state pension Mouthy money view?
Well, I think you're better out than me, Ed, because it's a particular hobby of yours. But basically, you want to get rid of it, don't you? You think? No,
look,
what shape did you describe it as to me the other day off air?
I didn't use the word pyramid. I didn't say it. That wasn't me. Someone else suggested it to me on Twitter.
I see. Okay, Your Honour.
No, I didn't disagree. No, it's not that we should get rid of state pension. I think obviously there's gonna come a point where we can't keep funding it at the level we are currently funding it. There's going to be some sort of reckoning, right? My message to anybody under the age of about 45, and this is what got me a bit hot and bothered about it on talking about it on Twitter last week, was watching Martin Lewis with a big picture of a piggy bank on the TV, and it's kind of like, you can't demonstrate the state pension as a piggy bank because it's not. It's funded out of taxation, right? And my sense of it is that if you have state pension when you retire, great. If you're making your contributions because you work, great. You have to make them anyway. You don't have a choice, but don't rely on it. We're not in a world where you can rely on it. You have to have your own pension, and whether that comes through a workplace pension or you manage that through a SIP, which I have a SIP, and what I did with mine was just basically club together my old workplace pensions into a SIP, and then have the workplace one, which has got the employee contributions, etc. You got to take it into your own hands, right? Craig, I know you guys are a big SIP provider. I mean, has Interactive seen any big changes in the way kind of people are managing SIPs? Has there been much going on?
What, in relation to sort of changes to the state pension?
Well, just in general. I mean, in general, are they getting more popular? People put more money in them. I think it would be great to hear that people are taking more kind of, opportunity to do so.
Yeah, I mean, SIPs have really grown in popularity. It's strange to think they've been around. They were introduced in the late 80s, late 80s, early 90s. They've been around for years, but the popularity only really started to pick up in the middle of the 2000s. And since then, they've become huge, obviously sort of turbocharged since pension freedoms, lots more people doing SIPs. I think it's some of the awareness around just personal pensions is increasing things like consolidating your pensions. There's so much on that, especially with people changing jobs frequently and just having this sort of, tons of pensions in different places that they don't typically monitor, and to sort of move them into one place. So, and I guess also it's SIPs is they're not just a product to save for retirement, is that you can keep the money invested and use them to draw an income too. So, I mean, I don't have any stats to hand, but they've, the popularity has soared in recent years. We'd expect that to continue.
Chris, you got
That's good news.
SIP, haven't you?
I have got a SIP. Yeah, I did exactly what you said there, Craig, which is the consolidation piece. I found one of my old workplace pensions was just dropped into some kind of, I don't know if it's the right terminology, but a zombie fund that was just charging a hell of a lot of money. So I kind of took that out and put it into a SIP, and it's been a good financial education for me, actually, which is, right, okay, what are you going to do with this money? We were talking before where we had about projections, which is quite an interesting thing, because I've actually found the projections probably undershoot when you have a sensible conversation with, someone like yourselves about where this might end up if I continue contributing at the same rate, and consider assume a certain amount of growth, which I know you can't necessarily rely on 100%, but, we have to predict the future somehow, or look into the future somehow. But the projections are a lot lower. So I've been walking around with this prevailing sense of doom about how I'm never going to have enough money to retire. And actually, when you sit down and do the sums and think about the sort of slow and steady approach to it, keeping an eye on your funds and all the rest of it, reinvesting, dividends, all that kind of good stuff, I feel a lot better about it now. But it's only through conversations and the loud budgeting that we do on here, Ed, where I felt that way. Because before, it's almost like I felt like I'm throwing money down a black hole and it's not getting anywhere. And actually, I'm better off having that money to hand, because in the last 10 years, there have been so many financial shocks or potential threats to my family's stability when it comes to paying the mortgage or my job, or investing, returns falling off a cliff, that actually trying to get past that sense of safety, psychological safety, and pour that money into markets has been a bit difficult. But my SIP's been a good vehicle for that, and one of the main reasons has been the tax relief. It's like if I put a certain amount of money in, I get a certain amount of, inverted commas, free money back off the government for it, and that makes me feel good. So I do as much as possible. So yeah.
I think it's with the whole sort of tax relief. So that's, I guess, another topic that's that could come up at the spring forecast, with this whole thing about fiscal drag and frozen tax thresholds. With tax thresholds being frozen, it means if that more people are tripping into higher rates of tax, and so things like putting money into pensions become more appealing for those affected. But yeah, that seems to be another one of the sort of areas that Rachel Reeves could look at, would be to prolong the freeze on income tax thresholds by another couple of years. There's quite a lot of talk about that.
I think that could work in tandem with kind of putting a bit of a limitation on how much people are getting out of state pension as well, because if you pin down that personal allowance of it's like 12,571 or something like that now, I can't remember if that's quite right, but if you pin that at the same level, the state pension eventually is gonna I think, I can't remember when it's projected to go over, but it's gonna go over that effectively, and that means that they're gonna start clawing state pension back through income tax, which is kind of mad, but that's where we are now. And look, I'll put this in context, and it's something that gets quoted a lot. The state pension relative to other European countries is one of the kind of the most meager in Europe, I think. I don't know the specific numbers. But then I guess those other countries are probably having conversations about how to fund their systems as well, right? So, how do you keep that balancing act going? I think it's very difficult to answer at this point.
Yeah. Well, it seems like, the state pension from April, the full state pension will be just under 12,000, and so it's only going to be 570 odd quid.
Yeah.
Short of the personal allowance. So you're thinking, well, two years of modest increase, inflation, wages, or one year and one the other, and it's going to have caught up, and it's the whole thing's going to use up the personal allowance, and everything else, every other bit of income is going to be taxable. So it's you can understand why governments do it, but it's they've all been frozen since 2021. So if it's prolonged again by by 2 further years from the current schedule, that'd be 10 years. So
yeah. Got to find different ways of doing it. I don't know. I think we've talked about this so much. The fiscal drag thing is, like you say, it's completely understandable why they do it, because nobody sees the front end of their wages getting kicked, do they? It comes out the back basically, and you only notice when you get a pay rise and it tips you into a higher band or whatever. Yeah, I don't know. I feel like I could sit here and opine government policy all day, but I guess we have to keep moving forward with our lives.
The state pension thing's interesting though, Ed. I did notice there was a huge rush, or there's been a huge rush to top up the national insurance contributions. That's been covered everywhere,
Yeah.
And I get that and understand that, and that makes sense, and it's wise to do that. But again, we talked about a mindset shift last week, that there does seem to be this sense that it's still a safety net in people's head. It's like, well, I need to make sure I have that because, and you're like, well, actually, as you said, in 30 years time, 40 years time, what's that going to look like? And actually, you can't rely on that no one's coming to save us on this. We need to kind of do it ourselves. We need to make sure that we're prepared as best we can for our own retirement. And so taking charge of that and thinking more about how you can use the stock market to help you achieve those aims, I think is more important than ever, because of all these questions that are swirling around now. Like we need to take charge of what we're doing and have clear aims and understand it and upskill all of us in this conversation. Speak to people like Craig and others to try and get a sense of what the right thing will be to do to navigate what decisions the government make and what else happens around us. So, yeah, I find the state pension conversation interesting because I just make the assumption, look, like you say, I've been paying my national insurance contributions. I'll get something, which will be nice, maybe. But if the rest of it is all on me, really, and I need to focus on that and see what I can do to change, pay future me, if you like.
Right. I think before we finish off, I think we're going to do my favourite segment now, which is what would you really like to see in the budget happen? Because I love that. Just speculating wildly. Craig, I'm going to put you on the spot now, if you don't mind. There was something you feel like you'd want to see in the budget, like a good thing or whatever. It could be whatever you want. What would you like to see come up?
I think I'd like to see something on ISA simplification. I think that would be nice. As we've sort of spoken quite a bit about ISAs today, particularly the stuff going on with cash ISAs, but there's some other things as well. The lifetime ISA is under review. The sort of government Treasury Select Committee, is looking at whether that's fit for purpose. There's all these other, the rumours about what's going to happen with the cash ISA, but I think the landscape is in need of some simplification, and it would be good, even if we don't have any sort of big policies around it, to learn a bit more about what's going on there.
I think that's a noble goal. Nice one. But that's good, Chris. I'm going to come to you next. What do you want to see? And
I don't have anything specific other than I'm just kind of hopeful that the cuts that are being mooted aren't as deep and as swinging as people think they may be, just because I think it would just send the wrong message at the wrong time to everybody about, it would kill the momentum of what they're trying to achieve, whatever you like, whatever political persuasion you're from. If it's like we've immediately had to start getting the fiscal knife out again, I'd be concerned about that. So I'm hoping against hope that it doesn't have to be that dramatic, and actually we can keep sticking on with the plan, because that's what we need. We need a plan and stick to it. What about you, Ed?
Well, I was going to say, I agree with you. I think that's possibly a political tactic that could actually be quite effective, where you really talk up how you're going to absolutely slash the welfare bill or whatever, and you're going to, trim the fat in a massive way that kind of spooks half the country. And then when you stand up to speak, you put forward much more moderate trimmings. And everyone's like, oh, okay, well, that's fine, okay. And then you kind of sold them a turkey leg instead of the whole turkey sort of thing.
So no pictures of Rachel Reeves standing up at the dispatch box with a chainsaw. Is that what you're saying?
I mean, look, let's be honest. It would be she effectively becomes the heir to George Osborne at this point if she's, slashing the welfare bit, which, we've seen Labour do a number of extraordinary things already, which, whether or not you think they're in the interest of the country, are surprising to see happening from a Labour Party, which to me says actually they do seem to an extent like a bunch of grown-ups actually just trying to make difficult decisions, which is fair enough. I think people to the left of myself, and perhaps probably to you as well, Chris, might say that they're betraying all sorts of, voting cohorts, etc. But I think we're at that reality point. Right, I'll finish with my fun one. I bet you can guess what it is as well, Chris. Craig's sitting here absolutely terrified of what I'm about to say now.
Excited.
No, I'm not going to touch the state pension because we already talked about that. So my favorite,
say state pension. Okay,
my favorite. No, we've talked about that. Move on. My favorite hobby horse, other than the state pension, is to talk about how we need to abolish council tax and replace it with a land value tax, and it's just going to make everybody happier and make the world a better place. And I'm not going to go into horrendous amounts of detail.
We're going to march off into the sunset, holding hands and singing Kumbaya when you do this land value tax, right? That's the thing. It's going to solve all our problems.
I will retire happily to my small piece of land and till it and pay my tax.
Till it. Brilliant.
Right. I'm going to put the podcast to an end there, I think. Craig, it's been really, really great to have you on. Thank you so much for joining us.
Thanks for having me. Absolute joy.
Chris, it's been a pleasure as ever to have you as co-host.
Likewise.
Thank you, everybody, for listening. We'll speak to you again soon. Thank you and goodbye. Don't forget to subscribe to the show on Spotify, Apple Podcast, or YouTube. You can also follow all our latest updates on TikTok, Instagram, or X. Finally, check out all our money stories on the Mouthy Money website and subscribe to our weekly newsletter for all the latest straight to your inbox. Thank you and goodbye.